What are credit cards? Credit cards are a type of payment card that allows its holder to borrow funds from a financial institution up to a certain limit to purchase goods and services. The borrower must then repay the borrowed amount along with interest for the credit granted. In essence, credit cards allow consumers to buy things on credit, which means that they do not have to pay the entire amount upfront. Instead, they can spread the cost of their purchases over a period of time, as long as they make the required minimum monthly payments. Credit cards come in different types, each with its own set of features and benefits. Some credit cards offer cashback and rewards programs, while others offer low interest rates, balance transfer options, and other perks. While credit cards can be a useful financial tool, they also come with risks. If you do not manage your credit card payments properly, you could end up with a high balance and a lot of debt, which can affect your credit score and lead to financial problems. Therefore, it is important to understand how credit cards work and how to use them responsibly. In this guide, we will cover everything you need to know about credit cards, from choosing the right one for your needs, to using it wisely and paying it off on time. How do credit cards work? Credit cards are a form of borrowing money from a lender, usually a bank or credit card company, that can be used for purchases or cash advances. Whenever you use a credit card, you are essentially borrowing money from the lender with the promise to pay it back at a later date. The amount of money you are allowed to borrow is referred to as your credit limit, which is determined by the lender based on your credit history, income, and other factors. When you use your credit card to make a purchase, the amount you spend is added to your outstanding balance. Each month, you will receive a statement that shows your outstanding balance, any fees or interest charged, and the minimum payment due. You are required to make at least the minimum payment by the due date listed on the statement to avoid late fees and additional interest charges. If you do not pay off your balance in full each month, interest charges will accrue on the outstanding balance. The interest rate, or annual percentage rate, April, is determined by the lender and can vary based on your credit score and other factors. It's important to understand the interest rate and any fees associated with your credit card to avoid accruing unnecessary debt. In addition to making purchases, credit cards can also be used for cash advances. This is when you withdraw cash from an ATM or bank using your credit card. Cash advances typically have higher interest rates and fees than regular purchases, so it's best to avoid using your credit card for cash advances unless it's absolutely necessary. Overall, credit cards can be a useful tool for managing your finances and building credit. But it's important to use them responsibly and pay off your balance in full each month to avoid accruing unnecessary debt. Types of credit cards. There are several types of credit cards available to consumers, and each comes with its own unique benefits and drawbacks. Understanding the different types of credit cards can help you choose the one that best suits your needs and financial goals. Rewards credit cards. These cards offer rewards for purchases made using the card, often in the form of cashback or points that can be redeemed for travel, merchandise, or other rewards. These cards are perfect for people who use their credit cards frequently and want to earn rewards for their spending. Balance transfer credit cards. These cards allow you to transfer high-interest credit card debt to a card with a lower interest rate. A allowing you to save money on interest charges and pay off your debt more quickly. These cards are ideal for people who are struggling with credit card debt and want to pay it off as quickly as possible. Secured credit cards. These cards require a security deposit, which serves as collateral for the credit card company. These cards are designed for people with little or no credit history, or those who have bad credit and are trying to rebuild their credit score. Student credit cards. These cards are specifically designed for college students and typically offer lower credit limits and fewer rewards than other types of credit cards. They are often easier to qualify for than other cards, making them a good option for students who are just starting to build their credit history. Business credit cards. These cards are designed for small business owners and offer features like expense tracking, employee cards, and higher credit limits. They can help business owners separate their personal and business expenses and build credit for their business. By understanding the different types of credit cards available, you can choose the one that best suits your needs and financial goals.